Hello everyone! In this session, we'll dive deep into the major developments happening at the forefront of the digital economy. Today's theme is two extremely contrasting yet complementary giant strategies that are shaping the future of digital assets. One is an offensive strategy that aims to transform a social platform with a massive user base into financial infrastructure. The other is a defensive financial strategy that protects the base asset Bitcoin from any market turbulence. 1. Elon Musk's super app, a major pivot to financial infrastructure. Let's start with the offensive strategy, the moves being made by X, formerly Twitter, led by Elon Musk. X's payment service called X Money has begun recruiting senior engineers to build a new payment platform. This is not merely a recruitment drive for feature expansion. Musk's vision is to transform X into a super app similar to China's WeChat. WeChat integrates messaging, payments, shopping, ride-hailing, and essentially all functions needed for daily life into a single app, serving as a massive infrastructure used by over 1.3 billion people in China. When Musk acquired Twitter in 2022, he stated that purchasing X was an accelerant to create an everything app aiming to realize a platform that integrates social media, payments, and financial services. Currently, X has approximately 600 million monthly active users. Expectations are extremely high for leveraging this enormous user base for financial services. What the cryptocurrency community is paying the closest attention to is whether X Money will support cryptocurrencies. As of now, the job postings contain no specific mentions of blockchain or cryptocurrency. However, Musk himself has long expressed support for Bitcoin and Dogecoin, and Tesla, which he runs, accepts Dogecoin for merchandise payments. Furthermore, figures such as the founder of Skybridge Capital and Coinbase CEO Brian Armstrong have proposed integrating the stablecoin USDC into X's payment system. Analysts believe that given cryptocurrencies are the fastest means of remittance, there is a high likelihood that X Money will support crypto payments in some form. Adding momentum to this development, the blockchain project Solana officially indicated through its account a willingness to cooperate with X Money's talent search. In June of this year, a former Solana advisor joined X as Chief Product Officer, so the deepening relationship between X and Solana cannot be ignored. If X Money integrates cryptocurrency and the super app is completed, it could become a high-speed highway of finance in the Web3 era, fundamentally changing how hundreds of millions of people access financial services. 2. MicroStrategy's impregnable balance sheet. Next, let's turn to the defensive strategy, the financial approach of MicroStrategy, the publicly listed company that holds the most Bitcoin. CEO Michael Saylor continues to unwaveringly emphasize that even amid market downturns, the long-term strategy is to keep buying and holding Bitcoin, declaring it the best financial asset. However, companies holding Bitcoin always face the challenge of short-term dollar-denominated payment obligations, such as preferred stock dividends and debt interest. During periods of market instability, there is a risk of being forced to sell their core asset, Bitcoin, to meet these obligations. To avoid this, Mr. Saylor has launched the concept of an impregnable balance sheet. Its core is securing US dollar reserves. By using proceeds from stock sales, MicroStrategy has reportedly secured $1.44 billion, approximately 224 billion yen, in reserves, enough to cover dividend and interest payments for 21 months. Mr. Saylor has stated, "We don't want to be forced to sell Bitcoin when the stock price is depressed, and these dollar reserves ensure the company can continue paying dividends without letting go of Bitcoin." The company aims to maintain cash reserves equivalent to 2 to 3 years of dividends for the next 5 to 10 years. Mr. Serra has explicitly said selling Bitcoin would only be a last resort when the stock price falls below the value of held Bitcoin and new fundraising becomes impossible, demonstrating the thoroughness of this defensive strategy. This financial structure creates an ideal two-tier system. Long-term growth relies on Bitcoin, the world's digital reserve asset, while short-term stability is secured by the US dollar, the world's reserve currency. Furthermore, Mr. Saylor has hinted at future revenue streams by suggesting entry into Bitcoin lending. He indicated they would actively consider this once major, highly trusted banks launch full-scale lending services, exploring ways to not only hold Bitcoin but also generate stable income from it. Today's two developments illustrate just how crucial the roles of infrastructure and asset are as digital assets mature into core components of the economy. Elon Musk's X Money represents an aggressive strategy of integrating digital finance by embedding a new financial circulation system into a massive existing user base. In contrast, MicroStrategy's financial strategy is a defensive approach of preserving digital assets, protecting the long-term value-based asset Bitcoin from any short-term market chaos. They have built a solid breakwater with US dollar reserves, so they do not have to resort to the last resort of selling BTC to meet short-term payment obligations. Today's Bitcoin price stands at 14,454,219 yen. But amid market fluctuations, the simultaneous advancement of a fortress building strategy, like MicroStrategy's steadfastly protecting core assets, and a high-speed integration strategy like X's fusing Web3 technology into existing giant platforms will dramatically improve both the reliability and convenience of the entire digital economy. This is clear evidence that digital assets are evolving from mere objects of speculation into true economic infrastructure. See you again next time.